We are looking live at DataVault AI Inc., ticker symbol DVLT on the NASDAQ, just minutes into the trading session on November 5, 2025. The stock is currently trading at $1.80 per share. It opened with a significant gap up this morning at $1.92, spiking to $1.94, before aggressively selling off back towards yesterday's close of $1.78. This volatility isn't random. It is the direct result of a massive, high-stakes tug of war between a potentially company-making catalyst and a deeply skeptical, well-researched bear attack. The market expectation, the narrative driving that morning gap up, is almost blindingly positive. Just yesterday, DataVault AI announced an exclusive licensing agreement with Scilex Holding Company. This deal provides $10 million in upfront license fees, which is significant for a company of this size. But that's not the headline that has investors energized. The headline is the attachment of potential sales milestone payments of up to a staggering $2.55 billion. For a microcap stock, that figure is almost theoretical. This, combined with recent announcements of partnerships to tokenize music data and even a meme coin distribution for shareholders, paints the picture of a company on the verge of an explosive breakout, leveraging the hottest sectors in tech, AI, and real-world asset tokenization. But the reality of the price action tells a different, more complicated story. That immediate spike from 192 to 194 was met with a wall of selling, pushing the stock right back down. Why? Because for every investor buying the $2.55 billion dream, there is another looking at the harsh realities of DVLT's recent history. The primary counter-narrative is coming from a recent and brutal short seller report published by Wolfpack Research. This isn't just a casual bearish take. Wolfpack has directly accused the company of making misleading claims about its technology, and most critically, has highlighted the past regulatory history of its CEO, Nathaniel Bradley, including previous SEC charges. This report has become a rallying cry for the bears, who believe the company's numerous announcements are more style than substance. So, let's look at the battlefield, because that's what this stock chart represents. The short seller component here is not trivial, and it's crucial for anyone holding or considering this stock to understand the mechanics. According to recent data from Fintel, the short interest as a percentage of the float is sitting around 7.27%. While that's not an astronomical squeeze number, the real story is in the cost. The borrow fee rate for DVLT is reported at 12.45%. This is a high rate, meaning it is expensive for short sellers to borrow shares to bet against the company. A high borrow fee implies strong demand to short the stock and a high level of conviction from the bearish camp. They're paying a premium to maintain their negative position, likely believing the Wolfpack report is accurate and that the company's fundamentals do not support its valuation. However, anyone looking for a classic short squeeze needs to look at the next data point, the days to cover. For DVLT, the days to cover ratio is a mere 0.13. This is extremely low. It means that given the stock's high trading volume, all the short sellers on record could, theoretically, buy back their shares and close their positions in less than a single trading session. What does this mean for you? It means the stock isn't a coiled spring waiting to explode in a squeeze. Instead, it's a high-frequency battleground where shorts can enter and exit with speed, adding to the extreme intraday volatility we're seeing right now. They are not trapped. This volatility is a fight between programmatic traders, short sellers, and retail investors, all reacting to the same conflicting headlines. What's your take on the Wolfpack Research report? Is it a valid warning or an attempt to shake out retail investors before the Scilex deal gains traction? The debate is raging, and it's visible on forums across Reddit and X, where you'll find two completely separate investment theses. The bulls are pointing to the IBM partnership as validation of the technology. They're highlighting the Scilex deal as a game changer and pointing to reported year-over-year revenue growth that, while starting from a small base, is still moving in the right direction. The bears are focused on the Wolfpack report and one single devastating number. That number is 3,501%. According to some data providers, DataVault AI's total shares outstanding have grown by over 3,500% in the past year. This is the definition of massive, crippling shareholder dilution. This is the reality that balances the $2.55 billion expectation. The company is burning cash at a high rate. Recent filings show a trailing 12-month net income of negative $68.6 million on revenue of just $4.44 million. To fund this operation, to keep the lights on, and to develop this technology, the company has been issuing new shares, and a lot of them. This dilution is a constant anchor on the stock price. Every new share issued makes each existing share worth less. This is the core of the bear argument. It doesn't matter how great the technology is if the company has to endlessly dilute its shareholders to fund its existence. So what does DataVault AI actually do? The company, which was formerly known as YSAW Technologies, has pivoted hard. It now operates under two divisions: an acoustic science division, which holds the legacy patents for wireless audio tech like YSAW and ultrasonic data over sound like ADIO, and a data science division. This new division is the heart of the bull thesis. It is focused on AI-driven data valuation and, most importantly, the tokenization of real-world assets. The Scilex deal is the first major example of this. DVLT's platform will be used to tokenize sensitive biotech assets like genomic and DNA data, diagnostic results, and drug information, creating a secure, tradable digital representation of these assets. This is cutting-edge Web 3.0 infrastructure. It's an ambitious plan to build a new kind of exchange for data, a concept that is in itself worth billions if it can be executed. The tension is clear. The company is signing deals with major partners like Scilex and IBM. Scilex itself has become a major shareholder, acquiring over 8% of the company as part of its strategic partnership. This is a significant vote of confidence. Insiders, including the CEO, have also been reported as acquiring large blocks of shares, albeit at prices much lower than where the stock is trading today. These actions suggest a strong internal belief in the future. But this optimism is clashing with the recent termination of another announced deal. Just 2 days ago, on November 3rd, DataVault AI announced it was mutually terminating its agreement to acquire API Media Innovations. While the company stated there were no material penalties, the cancellation of a previously promoted acquisition adds another layer of uncertainty and fuels the bearish narrative that the company struggles with execution. So as a potential investor, you are standing at a crossroads. The future outlook for DVLT presents two wildly divergent paths. Path 1 is the bull case. The $10 million from Scilex provides a crucial cash infusion. The company successfully integrates its technology and starts to hit even a fraction of those $2.55 billion in milestones. The tokenization platform gains traction, the legacy audio patents are monetized, and the massive dilution ceases as the company becomes self-funding. In this scenario, $1.80 a share will look like an unimaginable bargain. Path 2 is the bear case. The $2.55 billion in milestones prove to be a pie-in-the-sky figure that is never reached. The Wolfpack research report turns out to be correct. The cash burn continues, forcing even more dilution, and the stock price is slowly crushed under the weight of an ever-increasing share count. The promising partnerships fail to generate meaningful revenue, and the company remains a high-concept, low-execution story. So the signals to watch next are clear. The first is the company's next earnings report. We need to see the impact of this $10 million on the balance sheet and get any concrete guidance on revenue. The second is any update, any at all, on the progress of the Scilex integration and the first steps toward those milestones. Third, and perhaps most important, is watching the filings for any new share offerings. The company's ability to fund itself without further massive dilution is the key to unlocking shareholder value. Comment below how many shares of DVLT you're holding and if you're in it for the short-term trade or the long-term Scilex lottery ticket. In summary, the expectation for DVLT is that of a revolutionary AI and tokenization company, validated by major partners and a multi-billion-dollar deal. The reality is that it is a company with a high-risk, high-burn rate model, a history of extreme dilution that has damaged shareholder value, and a prominent short seller actively betting against its success. The volatile price action we are seeing this morning, the gap up and the subsequent sell-off, is not noise. It is the market trying to price these two extreme conflicting narratives in real time. The $1.80 price tag isn't just a number. It's the precise point of equilibrium between a billion-dollar dream and a history of financial struggle.